family? I got my main man in the building today. You know him as Metarize on Twitter. You know him as the ex marketing banketing god. My guy, Winston Buckley. What's going on, Winston?
What's going on, people? How y'all doing? Glad to be here with Justin again. Thank you for having me on, bro.
As always. Yeah, so we got Winston here. We're just going to talk a little bit about the macro environment that's been going on, share some of our thoughts as we usually do. Hopefully, you can stick around and learn something and share your thoughts with us in the comments. Please, if you would, go ahead and drop my brother a follow. You can find him at, what's your Twitter again? Metarize?
At Metarise. So you can search me at Metarise or get Metarise on most social media channels.
Boom. There it is right there. And then obviously you can follow me as well at But Woodja. So they'll follow at Metarize there. We're going to do a macro talk here. We're going to go ahead and get into it. So, Winston, I appreciate you bringing up some of these topics that you brought forward to me. So if you want to go ahead and kind of take it away as far as the direction you want to take it, what do you want to talk about first?
All right, yeah. A lot of us are concerned about what's going on in the crypto world and what's affecting the crypto markets, but we really need to take a step back and just look at the world, like what's going on, and we can focus on the U.S. and the macro environment. I mean, what happens here largely affects what happens across the globe, and obviously, the crypto market is just a microcosm of what's going on in the overall macro environment. So, yeah, let's just talk about some of the stuff that's going on out there and how it's affecting our market. So that way, as we're deciding on what should we invest in and how should we invest, we'll have some of that information there to help us with our decisions.
I heard that. I heard that. And I agree with you. So, I guess one of the biggest things, right, that's on everybody's mind, the CPI numbers just came out, right? Consumer Price Indexing number just came out, and it printed at, I think, 8.6% when we were expected 8.3%. And we've seen a small sell off in the crypto markets so far. And then we have the next numbers coming in on the 14th, which is this Wednesday, and those are going to be the rates decision, the FOMC meeting to see if they're going to raise rates or change any rates. So I guess give me your take on inflation and let me know what do you think we can do about it? What do you think if there's any runway towards saving it? You know, any thoughts there?
Yeah, I'm glad that you brought up that Fed meeting that's happening on Monday, which is the 13th of June. And so a lot of eyes are on that Fed meeting, and not only what's going to be released at that meeting, but also what the Fed chair is going to say at the time about future either rate hikes or rate cuts or just the overall environment as far as what the Fed is planning to do in the future, because that drives investment decisions as well. A lot of experts are saying that we are going to have either half a percentage or 0.75 percentage rate hike this upcoming Fed meeting, followed by possibly another one in July, which may be another zero point 0.5 or 0.75 rate hike. And then I believe they take a break in August and then meet again in September. So this summer, just for equity, so if we're just looking at the stock market, that's going to be kind of brutal for the stock market. And for us, now people are saying that crypto kind of trades along with the Nasdaq, so like the blue chip cryptos, your Bitcoin and Ethereum, Solana, the large cap cryptos are trading along with the Nasdaq, like the risk on assets of the Nasdaq, and so that's been getting just tore up over the past few months, all of this year. Yeah, I mean, even towards the end of last year, we started to see those cracks in the Nasdaq. So all the eyes on the Fed and what the Fed is doing, but for us, things looking at like the Nasdaq and what's happening with Amazon and some of the FANG stocks, like what's happening there is largely affecting the investment decisions here.
Yeah, seems like crypto, mainly Bitcoin, right? Because the crypto market follows Bitcoin, and seems Bitcoin has been following the TradFi markets as far as like the Nasdaq and the S&P, and anytime. More so towards the tech stocks, right? People are correlating Bitcoin as pretty much like a tech stock. So when you see those tech stocks not doing so well, you see Bitcoin kind of mimicking that, which is strange, right? Because we can get into deeper why the real use cases of what we see for Bitcoin and what was its intended purposes, but or we could save that for another day because it could be a tangent there. So it's interesting to see that it followed the traditional market so much, so often, right? So I know we are looking for that decoupling to happen. And also with the ETH coming up, wondering like if the ETH merge, some people think the ETH merge may cause a decoupling into that, but that's another story for another day. Today we're talking about the macro environment. And so you brought up the Fed wanting to raise the rates at 0.5 to 0.75. Now, the market has been pricing in, right, or been expecting about a 0.25 to 0.5 rate hike already. Do you know what the previous hike was? They just hiked it at the last meeting. Was it 0.5 or 0.25?
Yeah, if I'm not mistaken, that was a 0.5% increase, which was expected as well. And the interesting thing around it is it's like those expectations are there, but still on those days, we still get this crazy overreaction. It's just like the sell off, even though we know was going to happen. The psychology around investing is just so interesting. And so now we have this new phenomenon because we do have the likes of Robinhood and PayPal and Coinbase, and which is a good thing because we have the access, so much more access to retail investing, and it's so easy. But a lot of times, because a lot of retail investors are uneducated about how these things work, and last year may have been the very first time that people got into investing, and they see a 20% correction. They're like, well, let me take what I have and sell off, which is a lot of times triggered by big money selling off the assets, and then the small money, or what I hate to say what people call stupid money, sells off as well. And it's like this cascading effect, and it's crazy because we know what's coming. However, the sell-offs would still occur. And for me, even though a lot of the numbers kind of reflect this baked in price, we're probably still, and this is no financial advice, but we probably still going to see some sell-offs throughout the summer.
Yeah, I would definitely assume that we are still going to see a few sell-offs throughout the summer. I think there's another leg further down to go. One more big leg of capitulation in the markets to really clear things out. Although there is a case being made, call it hopium or what you want, but there's a case being made that the Fed cannot continue to raise rates, right? That it is going to cause kind of like a train wreck of a situation. We're already in a train wreck of a situation, but even more so, right? Maybe another oncoming train will be coming in here as you have the election coming. A lot of people, the most people turned 30 years old about, was it 10 years ago? There was all the baby boomers are coming into the age of retirement, or not quite retirement, but they're getting there, right? Where they're actually not generating more income. They're more living off a fixed income, and they have a lot of their wealth tied up in these assets, these commodities, these stocks. So they also are the biggest voting power. So they go out and vote the most. So there's been a small debate I've heard rumblings of where you have a little bit of the older generation losing a lot of their wealth in the stock market. And if they, since they vote, they actually go out and vote, that the government may have to swing their assessment of things to keep the people in power that are currently in power. So do you have any thoughts towards that, or have you heard anything similar?
Yeah, it's interesting, and I really don't know how this is going to play out. So, on one hand, with the baby boomer generation, they have created so much wealth over the past decades. However, there's this huge pension crisis that's looming as well, and we don't know how that's going to play out. But there's talks about a lot of unfunded liabilities in pensions, both private and public sector pensions. So that's one thing. But then also we're looking at Social Security. That needs to be shored up. So that's another thing. And then with inflation hitting, the baby boomers on that fixed income, the reality for a lot of them is that they are either considering either downgrading their lifestyle, and what does that mean, or going back to work. So that may actually impact what's available out there for millennials and Gen Zers. So it's like if the baby boomers hold on to these jobs that would be the income producing jobs for Gen Zers and millennials, then that may be a problem in itself. I think the biggest thing that's hurting like our generation and the younger is the housing. And so the baby boomers have a lot of the housing, which they will transfer, over time, whether through passing or just transferring their assets as they age to millennials and younger, which is a good thing. But I don't think it's going to be at a rate that we would probably need to help build wealth for millennials. So man, it's a I really don't know how that's going to play out. And I know we're going to be talking about like things that we can do, in this time, but really just kind of fortifying like your value during this time. If you're a millennial or a Gen Z or even younger, like adding value to yourself is going to be so important, because the transfer of wealth is going to be very different than it has been from generations in the past. So I don't know if that makes any sense, but that's kind of how I feel about the situation.
No, I mean, to me, it made perfect sense. And like, in a quicker summary way, you have the younger generation entering the workforce while their family, is still in the workforce. And if my dad was a computer engineer, then maybe I want to be a computer engineer. I learned some things from him, and we end up, somehow down the line competing for the same job, right? So it's when I popped up with the ticker, Dad, retire already. I want a job. But like then transitioning into that, what you said was that you could build some skills, some real value skills. So with that being said, when you talk about building your business, maybe we could kind of roll into that and building up your business, building up your portfolio of businesses, right? Or building up your portfolio of skills and knowledge-based skills that you can then go out and develop into businesses. So, can you touch on that at all or a little bit?
Yeah, absolutely. I mean, we're in this time where it just seems like the sky is falling, but the most millionaires were made during the Great Depression, like the most millionaires. And then out of this last recession that we had back in '08, '09, I mean, look, we got Uber, Amazon has become what it has become, Facebook, Google, all the companies that basically dominate the S&P 500. They really took off during this last recession and the last and even the last pandemic. I mean, if we look over the past couple of years, just the businesses that sprung out of there, and some people made the most money than they ever made during the pandemic. So this really is a time where we do need to look at, okay, all right, here, where is my skill set? And we have the most access to things than ever. I mean, you can literally go on a Udemy or a Coursera and get certifications, for $20. There's never been a time like this. However, people are not taking advantage of what's out there, and I think that's really is going to separate the winners from the losers. Like who's willing to put in the work during this time, because we're not going to be able to get it. Only, I mean, things are still going to appreciate. Like real estate is always up and to the right. Like we're going to see some pullbacks there, but long term real estate is always going to be there. But the access to real estate, for us now, let's say if interest rates and real estate go up to 7-8%, and you're not making the type of money that you need to save to put 20, 25%, 30% down on that house, where does that put you? So I think this is the time to really build up the skill set, so that when these blockchain jobs come out, when these coding logistics jobs come out, that you have those certifications to say, hey, I've been degenning for 5 years. I have this skill set in CFI. I have this skill set in trading cryptocurrencies. You're going to be a prime candidate on top of your skill sets that you built over the course of these years. So I think this is the time to really strike.
That's a great way to look at it, and I tend to agree heavily with you there. Me myself personally, I took there's a Udemy course complete JavaScript coding as well as a Udemy course about Solidity dev work that I'm currently enrolled in. I'm also not really taking a course, but I've been doing a lot more video editing, just my YouTubes, right? Just getting on my grind on YouTube and really trying to tighten things up, see where you can make things a little bit better. And then we even spoke off air. I'm looking into getting on TikTok and putting out content on TikTok just because I see that's where the people are going, right? So, you know, when times are good, it makes everyone get complacent a little bit. You're like happy, you know, when you just after you get done eating, you get a little fat. You sitting back feeling fat, feeling happy, right? So when times are bad, you either have the people that sit back and complain about the bad times, or the ones that are figuring out a way to make it good again. So don't let yourself sit back and starve, right? You got to go out and get it how you live it. So, and like also to speak on what Winston was saying, there's so much out there, right? Like don't tell me you can't do this, you can't do that, you can't learn this. Like at this point, you know, you're in pretty heavy denial, you know. And with also all the leaders in the space that we have, you know, the Ian Dunlaps, the EYLs, the Wall Street Trappers. Like, don't tell me the resources aren't there, right? But off of that high horse, I did want to touch on what you're saying with the housing market. So I did see lumber is down. Lumber is down almost 50% from its all-time high back in May of 2021. So year over year, it's down about 50%. And so I do think maybe there could be a small pullback coming in the housing market just because it seems like less people are building. And we're just now entering this recession. It's like right around its 200-week moving average. So something to be aware of there. I just thought it was an interesting little caveat, but
Yeah, that's good. That's real good. Yeah, I was reading an article just yesterday about the overstock that Walmart, Target, and Costco and some others have. So we went through this period where it was just this supply shock on the negative side where we couldn't get anything. And I mean, even up to last month, it was just frustrating going to the grocery store because something that you're looking for may be there or maybe not. And the narrative that was told was that there was just this supply shortage that was out there, and rightfully so with some things there are. But a lot of what we're seeing is actually a shortage in labor. So products actually being there, but not being put on the shelves, or that might be in shipping, or that might be in trucking. And, you know, we've seen these reports of all the supply that's just been sitting outside of ports for months. All that stuff is working its way through the system. And then also a lot of stores have just been buying in anticipation for this pent up demand. But now that we're seeing that people have to be more hawkish over their own personal wallets, so they're like, well, I'm not going to go out and buy this new furniture set because the gas is high, you know, or that my energy is high, the food is high, and so now we have this oversupply that's out there, and yeah, it's just going to work its way through. So, you know, what does that look like? Will interest rates knock people out of the housing market, or will housing fall because, you know, it's just like it's unaffordable for them to stay at the prices that they are now. And even in our neighborhood, I mean, for the past couple of years, houses were selling like they were like in one day, like they were going on a contract in one day, and for 25 or 50 grand, I mean, even 100,000 more. People just sitting in contracts because we all had PPP and EIDL and stimulus checks and crypto money, and I mean everything was just up. But now I'm starting to see slashes in prices, so I'm getting these alerts now, like price drop, price drop. People are getting houses under asking, and that was just unheard of just a few months ago. So, you know, it really just speaks to, like, if we're patient and if we don't get off, you know, off our game, and kind of get caught up in the hype, and we all do. You know, I was caught up last year, man. It was just like JD Jay-Z money ain't a thing. I mean, it was really fun, you know, and it's fun when we're in those times, but like now we're starting to see like, okay, we're returning back to normal behavior. And it really reminds me back in 08, 09, I had friends in college that had 3 homes with no job. You know, they were just able to get anything and everything with easy credit and stated income loans and things of that sort. And the housing was just going up and going crazy. But some of the new builds, like at Atlantic Station, which was the hot thing at the time, they were going for like 600,000 before that recession, and then a few months later, those same properties were going for 200 grand. So I don't know if that's going to happen again because the situation is different. But yeah, we are going to see at the least a slowdown and maybe even a reversal on some of these prices.
Interesting time. So yeah, I'm looking into getting some multifamily properties. So anyone out there listening, trying to sell a multifamily for under asking, let me know. Um,
Yes, indeed.
all right, cool, cool. So obviously we have all these headwinds coming, super macro headwinds from every different direction. Is cash trash or is cash king? What is your you know determination here? Would you rather just be in cash? I see some people talking about getting into treasury bonds right now. Now I am not. Look, for the people watching the playback, don't think I'm some genius investor. I'm not. I've never bought bonds before. I'm more leaning toward the degen side. I buy high risk altcoins. I got my Bitcoin holdings and whatnot. So just wanted to make that fact known. But when like I said, we're always out there educating ourselves and putting ourselves out there to take in the information that's going on, right? So I see that bonds seem to be people are thinking of as a safe haven, but nothing is really giving you the returns or the safety right now. So what would you say? Would it be cash? Would it be bonds? Would it just be holding your assets that you currently have?
Man, cash is trash. That's really been like the sexy thing to say over the past few years. And I mean, largely, if we look at if you just go out and just Google charts on buying power over time, yes, we have just basically lost like three-fourths of our buying power over the past few decades. And in the past 2 to 3 years, like 25% of all the world's money was printed in a 2 year span. I mean, we're talking about like the history of the U.S. Like it was printed, and so yeah, I mean, it tore up it just tore what money is. And once we get into looking at some of these charts, we can look at what cash has done. But like we need cash, as much as you may hear cash is trash, get rid of it as soon as you can. You still have to have some gunpowder on the side to pull the trigger. And there are times, even myself, where I was over leveraged in a sense where I deployed maybe too much of my cash just buying assets, buying securities, buying cryptos, because everything was going up and to the right. But you do have to be disciplined because there are times like this, and probably over the next few months or a few years, where there's just going to be buying opportunities that you need cash for, and you don't necessarily want to go into debt or leverage in order to take advantage of those opportunities because you got to pay back that debt if that's
Right.
what you're using. So right now, I mean, cash is king. Like it does prove itself over and over that if you have cash, like you really can make some deals. And you can sweep so many floors from NFTs. I mean, I'm looking at Solana is like unbelievable. Just looking at Solana at like $37 today. And I'm like, this is like crazy to even think that it was going to go back there. It may even go lower than that, but you need cash to do that. And so, our last time that we talked, we were just talking about being firm on taking profit and sticking to your strategy because you need to do so in order to take advantage of the downturns. So yeah, I can be critical towards cash because you do lose money just keeping your money in a banking account. But you need that. My emergency fund is cash. At the end of the day, you still need some cash for certain things.
Yeah, I definitely agree. I found myself not having too much cash in December, November, and like I sold a few NFTs, but like not in crazy amount. I just was like, oh, let me just have something sitting here. Um, and then I actually got in a little too early, so that's another thing you have to be aware of, right? Like you don't want to try to catch a falling knife. You want to find out when the bottom is in. So, when is the bottom in? Do you think the bottom is in, Winston?
Man, you know, whenever I do a prediction, I'm always wrong. So y'all out there that are listening, maybe you just
Counter trade.
listen. Yeah, listen whatever I'm about to say, and just maybe that might be your investment strategy. Just do the opposite of whatever Winston thinks. But I don't think that the bottom is in. For some things, yes. There are some stuff that I mean it's retreated like 98%. Not Terra Luna. Terra Luna, the bottom is in and it's stuck there. Like it's done. Terra 2.0, whatever, it's over. It's that train is long gone. So yeah, that's it's sub-zero is where that one is. But as far as the crypto market, now I don't think so. I wish it was because that portfolio is just crying right now, but I don't think we've seen the worst. And we talked about it before, and it's easy to say this in May of 2021 that Bitcoin can experience an 80% downturn. It's easy for me to throw up that chart and say that and preach that to the crowd to say, y'all be ready for an 80% drawdown. This is a reality of crypto. But once you're in it, and now we're what 60% down, and just knowing that there's a possibility that if history repeats itself, that there's another 20% to go. It doesn't feel good to even think about that. But that's what it does. That's what it does. And people that are like really critical about it, even like long-term investors, it's a little infuriating because if you look at like Amazon stock in the very beginning, it was super volatile and it wasn't profitable for years. But now, it's like the best thing smoking. So, I do push back on people that have been in the market, and people, especially people that don't understand tech. Even the ones that do, what I mean? Apple, I mean, it's like we can see it over and over again where it took years, even sometimes even decades, for it to get to a point where it was both tame and less volatile than what it is. So that's my take. I don't think the bottom's in yet.
Yeah, I would tend to agree with you. I don't think the bottom is quite in yet. And 20% move down from here would actually take us almost exactly to the 200-week moving average, which is about 22,000. So, I think if we can hold that 20-week moving average, that would be great. That's coming in at about 22,000. And then if we do go under there, then the next one I'm looking towards is the 500-week moving average. And that number is coming in. Oof. Yeah, let's hope we can get this 22,000. So, yeah, we'll call the bottom. We'll call the bottom 22,000. But yeah, I'm gonna start buying assets. I'm gonna start buying a lot more assets around 22,000 with an expectation that we could draw down another 50% from there, right? Yeah. So with that expectation that it is possible, but not that it's going to happen. I'm not expecting it to happen. I'm expecting to make these bets, right, knowing that it is possible. So 22,000 to 17,000, hopefully we can hold there for Bitcoin. 17,000 being the previous all-time high from, was it back in 2018? 19,000, 17,000, right around there. So that's kind of my thoughts on that in the bottom.
Yeah, just circle back to something that you mentioned earlier about elections that are coming up in November. I don't know. I don't know what's going to happen. I know some people say that we do better under Democrats versus Republicans, so on and so forth. We don't know, but I do tend to think that people find money when it's time for elections. And if 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 the Fed, or I guess just our economy, if we are really not all the way off the highs that we've experienced, it's kind of addictive when it comes to quantitative easing. And we have been experiencing this quantitative easing since 2009. I mean, we're talking like almost 14 years of quantitative easing, and people are hooked on it. It's things have just exploded over a decade. And if I don't know if my prediction is right, I think what's going to happen is there's going to be these crazy rate hikes over the next few months, and then we may see some easing again because and it might not be in just what the Fed is doing. It may be like what Biden was talking about with the Build Back Better bill. I mean, we may see some type of a stimulus like that to spur growth in a different way. And so, there's going to be some type of stimulus because we just aren't really we really don't want to go through austerity measures. Like we just don't want to do it. And as much as it's needed, like it's really needed. I don't know if any politician really wants to say that I'm going to be the one to really get this budget and the economy under control in the way that it needs to be, because you're a one term whatever. There are some people that are out there, but they usually don't get elected. So I don't know, man. That's just what I'm thinking is going to happen, but who
No,
knows?
I could. No, I could definitely. Oh, hit my desk all crazy. I could definitely see that happening as far as like the Fed pivoting. I'm still interested to see, right? So the fact that the CPI print came up higher. So if we think this out, if we're just thinking it out, okay, CPI comes out higher than expected. Now we're thinking it out as the general market would think it out. So CPI comes out higher means the Fed is going to raise higher, means that markets are going to go lower, means that people are going to get upset quicker. So as we're playing through that process, we're like, all right, so now I'm thinking to the next meeting. Now the next meeting they raise it or they lower again. Now you have actual panic now because this raise, right? Now we know that we're expecting a raise of zero point 0.5, but let's say they do 0.75 like you were saying, because it went 8.6 instead of 8.3. So so that causes first panic. We get that sell off. That sell off will come down to that 20-week moving average, and now we'll be at the lows where people are like, all right, we're not going lower from here. And then we get that last final KO punch to come in that really does a huge capitulation, sends things down to Goblin Town, as they say. And then right then you get such a roar from the masses that the Fed actually does a pivot. They start leaning dovish, and then going into Q4, we get a turnaround and the markets start going up again. Mic drop. Maybe that happens. Maybe it doesn't. We'll see. Trust me, I'm gonna clip it if it does. um, so, but yeah, man. So I definitely agree. That's pretty much exactly what you were saying as well. So I was just kind of echoing that sentiment. But in these times of turmoil, right? What I've been telling everyone to do is you DCA. For me, I like to DCA anytime Bitcoin's under its 20-week moving average, just because that's usually like a fair value price, usually in my opinion, the 20-week moving average. So meaning that if you're buying it under the 20-week moving average, you're buying it under fair value, and eventually at some point it'll go back above its fair value price, whether that takes a few weeks or a few months. So, do you have any DCA strategies? I don't necessarily think it's best to DCA everything under its 20-week moving average. You might want to wait for a bottom to come in, or you can do a true DCA where you're not worried about the price. You just every, Monday you buy $50 worth, $100 worth, whatever the case may be. So, you have any thoughts on that?
Yeah, I'm actually rethinking what DCA looks like for me. So what I've had to do, and these are the times where you do have to put more work in. 2020, 2021, it didn't matter. Just buy, and it's going up. So right now, I've had to actually go back and look at my cost basis and see where I've been, because over the past few years, that cost basis has been going up. And so now I'm like, okay, where do I need to buy to bring that average back down to what's reasonable? I was just listening to the All In podcast, and they were just talking about forget the prices that we saw in 2020 and 2021, because it was just based on easy money. And so what I've been doing up to maybe earlier this month is looking at the all time high and then drawing my prices over there. But thinking about that, like if that was just based on just crazy valuations, I mean, if we go back to the ICO craze back in 2017, 2018, I mean, what was it based on? And so now it's like, all right, I need to look at, where the price action might have been before all this crazy money came in. And then even like really spending some time with just the fundamentals, like really doing my fundamental research and see where the action is. And then I know I'm getting a little off topic there, but that's how I'm using that's what I'm using for my DCA strategy. So for example, I've been looking at Solana, and yeah, at this point, like it's super attractive off its all time high, right? So I'm looking at the price, and I'm just like, man, this is crazy. Like this is a steal, but it is perspective too, because a couple of years ago, people bought Solana for 25 cents. So they are up, an insane amount. People that bought at 100 are down. So where we look
Right.
at it from, that's one thing to look at. But then two, I've been looking at stuff like active addresses. And that's something, is like, okay, where the action is, even in this type of market. And so if I see that, yeah, I just go ahead and just buy either weekly or bi-weekly. And I do have my alert set on my phone. So, I try to do like a bi-weekly buy, but there's just certain prices. Like I saw what Ethereum did today, and I was just like, okay, got to get some. So there are times where I get off my DCA, but for the most part, if I get paid, then I go ahead and throw some money in the market.
Right. I was actually leveraging some of my NFTs right now, and I used NFTFi to go ahead and take out a loan against my NFTs. And then, just the other day, I put up an NFT. I gave my loan details. They countered with a different loan detail. I accepted it, so I got to get what was it, point eight ETH at the price it was yesterday. I switched it to cash. ETH just fell. I'm gonna switch that cash back to ETH, have that arbitrage, and then pay the loan back, and I just made that without literally doing anything.
Ooh,
So
man,
there's always
that's a
opportunities.
stat.
There's always opportunities, right? You got these I have these NFTs that's just sitting here, and I'm like, you know what? I think the market is going to pull back a little bit more. Let me go ahead and take a loan out against that NFT. And now, counter example, also getting off topic, so let me keep this short. If the price of ETH would have went up, right, then I would have had to pay back more money to get my NFT back, or they would have kept that NFT. So it is still risky, but
It's risk,
um,
yeah. Well, all right.
yes. Oh, go
I
ahead.
know we're
Sorry.
going. Yeah, I know we're going on a little tangent here, but just wanted to get your take on this. So this is something that I've been thinking about. I've been looking at some of my NFTs, and what I've been evaluating is, do I value this NFT more, or do I value the underlying asset more? So if I bought this NFT, if it's a NFT that I bought with Ethereum, for example, and in my mind, I feel like NFTs are going to suffer some more pain over the next few months, right? Do I value this project more, or do I value the ETH more? So recently, I've been leaning more towards ETH is more valuable than this NFT. Yes, the NFT has gone down in value, but I may sell this NFT to get the ETH, get the price appreciation on the ETH, and then buy that NFT back, and then have that spread on the profit there. So I guess it really depends on like what narrative you have you want to buy into, and what thesis you have for yourself. And that's it looks like that's what you did there. You're like, okay, I believe that ETH has some ways to fall, and I'm going to use this strategy to make some profit. So yeah, the sky is falling, but that's to the advantage of others, and that's a strategy right there that I don't think a lot of people are even aware of.
Yeah, I mean, always just trying to find little ways to stay ahead or get a little edge, right? And like I said, that it's still risky. Like that could have went the opposite way. But just looking at the market sentiment, it was like, okay, what's the upside versus the downside? There was more. It seemed like it was more in my favor than not. So, but yeah, maybe we'll do a video with just some bear market strategies, how to keep making money and keep some cash flow coming up. Because I'm trying to host some yard sales, bro. Like I don't people think I'm playing out here. Like I'm ready to do it all. Like I'm ready to do it all. Like I don't need all this. What I got?
Right.
What that can go for real. So that's kind
Absolutely.
of how I'm looking at it. But well, man, it's been a pleasure. We've been on for about 40 minutes, going over a lot of great topics. I want to turn it over to you. If you had anything in specific you wanted to touch on, share, show, we can kind of get into that.
Yeah. Yeah, absolutely, absolutely. And we covered a lot of it just in our chat here, but it's good to show some visuals with what we're talking about here. So yeah, I'll breeze through some of these charts here. If you can throw that
Yeah,
screen
let's
up
go ahead
there.
and set that up for you. Boom. Oh,
All
not
right, all
me.
right.
I want to go ahead and throw you.
All right, all right. So yeah, we were talking about inflation and where it landed. So on June 10th, 2022, US inflation saw a 40-year high at 8.6%. But that CPI number, it excludes certain things and rent and housing a lot of times is calculated in a way that's not really reflective in there. So there are some other sites that you can look at, like this website, shadowstats.com. It gives an a calculation. It gives you an idea of a calculation based on what the CPI calculation or how it was done back in the 70s before they made some changes. So let me go to this alternative data and we can look at inflation. And here you can see that they have inflation at a little over, it looks like 16 or 17%. And so they're keeping housing in there. And housing is such a huge part of what inflation is. If you go to the Bureau of Labor Statistics, they can show you like what is driving up inflation. Now here, even though inflation is 8.6%, the CPI is 8.6%. You can see energy over the 12-month percentage change is almost 35% up, right? Food alone is 10%. I think it's higher than that. I'm going to make a chart. It's going to be called the chicken wing indicator, because my chicken wings have gone up by over 35% year over year. They used to be $2.99, and man, that $4.99. Wait, what am I talking about? That's like a 200% increase in my chicken wings. So I'm going to create a chart called the chicken wing indicator, and that's how I'm going to track food prices. So food is higher than that, but energy drives everything. Gasoline is one of the most expensive things that's out there right now, and obviously that's going to feed into everything else. So the trucks that supply the food, they're going to charge more, and therefore the food manufacturers are going to charge more. And another thing to look at, I don't have a chart for this, is just fertilizer. Fertilizer is like 4 times higher now, and we're going to see those prices reflected in grain, wheat, et cetera, et cetera. So food is going to, unfortunately, we're probably going to see some increases, further increases in things like macaroni, rice, things of that sort. And that's, of course, going to have a trickling effect. And so we may see the government come in and start doing like price fixes on things, but that has an effect somewhere else as well. But the Bureau of Labor Statistics, fumbling over my words here. Now, we were talking about, is cash king? Depends on how you look at it. I mean, you need cash. Now, one way to bring it down to earth for everybody is to look at the exchange rate from the U.S. to whatever country you want to compare it to. So you can go to Google and just do like a USD to whatever currency you want to look at. We're going to look at the euro. But right now, if you look at what the US dollar trades to the euro, is 1 to 0.95. So for every dollar you exchange, you get 95 cents or 0.95 euro. Whereas I remember some years back, it was like almost $1.20. Back in the 80s here, it was like a $1.50. So right now is kind of one of the best times to travel to Europe. So while it may be more expensive to do things here domestically, if you ever wanted to travel, this is one of the best times to do so. Whereas, so for example, in 2008, $1 would have been 64 cents or 6.64 euro back in 2008. I mean, now you're almost 1 to 1. So that Spain vacation is a lot less expensive now than it was 10 years ago. So it really depends on how you look at it. We were planning a trip to Cuba, and I was just looking at some of the things that were going on there. And because of some of you may be aware of some of the economic issues that they have there, like the exchange rate on the black market can be upwards of 100 Cuban pesos to one US dollar, which is, insane if you look at some of the prices for some of the things down there. So the US dollar, a lot of people are going back into it because they're selling off assets, and we're seeing this appreciation in the US dollar. All right. Another thing to look at, this is a chart just on gold. And so some people call it, I think Robert Kiyosaki calls gold like God's money, God's economic instrument. And he just says that because, gold has been around for thousands of years in all kind of civilizations. And no matter what currency is used, like we always revert back to gold in some way, some form or fashion. And we compare the dollar, whatever dollar that is, to gold. And so gold is sitting at pretty much an all-time high right now. Is it a safe haven? I mean, I don't know. That's up for debate. But I mean, having some gold in the portfolio is not necessarily a bad idea as well, because you can always convert it. You can always convert it to something. And even if, say, if, I hope this never happens, the US dollar fails, gold will still be a standard that could be used. So it's something to think about as well. Gold is performing high as usually because the economy is doing bad. We were talking about the Fed's funds rate. And so, yeah, like right now it's kind of scary to think like, man, they're going to go up maybe a whole percentage point in a year's time. But let's kind of like put this in perspective. I mean, from '08 to all the way up to 2016, I mean, we were talking like not even I mean, not even a percentage. And so, for those years, I mean, people were going out getting 2% mortgages. Some people under 2%. NACA had some programs where people have like 0.75% mortgages. When I was working in banking, this is what a Fed funds rate is. And so you usually can add like a percentage or two on top of that for mortgages. So to give you a perspective, mortgage rates, like a normal mortgage rate was like 7.5%. And nobody even blinked an eye at that. So now we may be returning to that. People are still going to buy houses. Like it's not really a big deal. And then people that are older than me, they go back to the 80s and they're like, man, I remember when it was 14% to buy a house, and we still bought houses. And people that bought houses in the 80s, I mean, that house appreciation is like tripled and quadrupled, since the 80s. So it's like, if we just calm down for a second and just take a look back and see what happens, like it in the long run, it really doesn't matter. We're still going to be able to afford things one way or the other. It's going to work out. It's just a little scary right now. And, of course, everybody feels a little broke right now. Let me skip past this. All right. So if you go to investopedia.com, I highly recommend. You can look at certain things. And this is a pretty good article. You can just search a history of bear markets on investopedia.com. And so you can look at like just several downturns in the market and like what the percentage rate that it went down. So like the Great Depression was it's like the granddaddy of them all. We're talking an 89% decline in the value of the Dow Jones. Now I hope that never happens again, because I mean that's like soup line territory right there. But even like 2002, we're talking 36%. 2020, I think it was like 30% down. But look how fast things bounce back. And so, yeah, that's a really good article that's there. You can see how quickly things went back, and then for how long the uptick after that was. So after most like recessions and downturns, the increase in the market far outpaces that downtime. So we were down in 2020 for like a few days, and then we saw almost 2 years of just price appreciation since then. So where's the money going? What are people doing? You can look at Warren Buffett. I have some criticism of Warren Buffett, because he's very like anti-crypto, so that's where we disagree. However, he has been investing for a very long time and has done extremely well. And typically he says to be greedy when people are fearful, and vice versa. And this is a time where he's starting to buy assets again. So he sat on a bunch of cash over the past couple of years, and now he's buying cash again. So it's an article on CNBC you may want to check out, and he gives some advice on maybe where you can park your money, something that you might want to check out. And Kiplinger has an article as well to show you what billionaires are selling. So there's a lot of selling off. They're saying we're going into like a risk off environment, and so crypto, sometimes is included in that risk off environment. But what are people selling, and what are they transitioning to? Is that cash, or is that some other type of asset or investment or equity? So that's what I wanted to share. And so, hopefully that's helpful. But, a lot of this, like I said, is really like perspective. How do we want to look at this? How do we want to play this? Just totally getting out the market, I don't think is the way to go. at this point, selling right now, is probably not the thing to do unless it's trash.
It's
You know,
too late, baby. It's too late. If you ain't get out the boat when we pump back up to that 48K back in whenever that was, February, then you might as well
Mhm.
just, you know what I mean, rock the boat,
Yeah,
just let it chill, just ride the waves out because you know, you're already in it. You already got your foot stuck in it, so at least
absolutely.
you know it's not financial advice, but that's like that I'd be leaning more towards that. But Winston, that was a great job. Hopefully everyone got to learn a little bit there and can follow up with some of the things that he was talking about. I truly enjoy our calls. You know, we talk on air, off air, online, offline about some of this stuff, and then when we do one of these broadcasted calls, it seems like it just flows right back from the conversation we were just previously having. So it's always a good time. Um, Maybe we can do another one. Maybe we can set up a live for the FOMC meeting. I don't know what you have going on
Yeah,
Wednesday or not,
that'd be cool.
but maybe we can kind of talk around that as well. So, did you want to give any parting advice or anything else for the people that are listening back here, listening and watching at home?
Yeah, this really is the time to just put in a little more work ethic around investing. It was fun. The party was fun. The past couple of years, the stimulus checks were out there. Everybody had a lot of extra money out there, but investing still is the way to one of the ways to increase your wealth overall. And so, it's not even an option with inflation. You have to invest. So you do have to figure out how to grow your money. But like we were talking about earlier, investing in yourself right now is one of the best things that you can do because one, and I stole this from TD Jakes, but relationships are currency. Network. I mean, I can't stress that enough. It was one of the things that I learned later in my life. But when it comes down to people making a decision about investing as well, if they know you, they're willing to take a bet either on you or something that you're a part of. And so building your network right now is one of the key things that you can do and, get out your comfort zone and go to, especially a free conference. I mean, what do you have to lose? A little bit of time. If there's anything free online, definitely do that. But it's even worth the money if you see a conference that's out there and it may be one a year. If there's some crypto conference out there, it might cost you $1,000, but the return on that investment is education. And then you might make a contact out there that might be it might be that one person. We only need one. You only need one person to really pour into you or for you to connect with. So that might be the thing to do. So I'll just say right now, yes, I'm still buying in this market. Probably on Monday if or whenever the Fed meeting is. If it goes down some more, I'm probably going to buy some more then because I do have that conviction around it, and Tesla's going to be tough. Going to be tough to look at, but investing into the market and investing in yourself are the two things that I can say. Oh, and lastly, I just want to just this is a reminder, and I had to check myself on this too because it's like I'm looking at the market, I'm looking at my portfolio, I'm looking at everything's down, 60% this and that. But I remember when I didn't even have anything to go down 60%, So it's like we're sitting on these assets. We got a whole bunch of more stuff than we had, a few years ago. And even still with the market down, it's like I have more than what I had before that. So it's like when you look at things that way, if you had something to lose, it's all good, at the end of the day. So once we get ourselves to that point, it's just like, all right, it's gonna be okay. It's gonna be okay.
Yeah, I definitely agree with what you said there. You know, don't think of your all time high, whatever the all time high number was in your portfolio. Get it out of your mind. You got to restart fresh with where you are now, right? The way that you can make the hard decisions, the clear decisions, the decisions that are going to set you up for the next run, um, is to not think about what already happened back then. Use that for history. Use that for lessons. Use that to take with you what you learned. But you can't just say, "Oh, I used to have 180K and now it's only worth X." Don't you can't do that. You have to work with what you have now, trim the fat, and then get the right mindset, stay inside the game, and you should come out all right. And also like Winston said, increase your network so that way you can increase your net worth, right? Get around the people that are also doing the things that you want to be doing. So, all right, Winston, I truly, truly appreciate you coming on. Let's try to connect for this Wednesday morning FOMC meeting. That would be great to go live then. And if nothing else, brother, I'll catch you on the next one. All right.
Man, that sounds good. Appreciate it.
In the words of my guest, Winston Buckley, that'll work. Talk to y'all soon.
Yeah.